Hey everyone, it's Brian on TINYCRYPTOBLOG. Will you look at this? I saw this today when I came across the headlines on Zero Hedge. Bitcoin becomes safe collateral. JP Morgan to offer loans financed with crypto assets. What they'll be able to do, they will provide financing against crypto exchange traded funds, ETFs, beginning with BlackRock's iShares Bitcoin Trust. So that means that the same way you might put up your home as collateral for a mortgage or a second mortgage or refinancing or whatever, you put up something tangible of value as collateral. People will be able to use shares of ETFs, specifically Bitcoin ETFs, as collateral for loans. And they can do with that money whatever they please. If they want to use that money to jump into the market and buy something else, if they want to buy futures with it, if they want to buy more shares of the borrow against their ETF, to buy more shares of the ETF, they can do that too. There was something here. Let me take you to this. Hi. Anyone here remember GBTC, the Grayscale Bitcoin Trust? The Grayscale Bitcoin Trust, for those that don't remember or just don't know what it is, there was a company, Grayscale, and they created an investment vehicle that operated like an ETF. And the way the mechanics worked was you would send your money, you would send your money to Grayscale. They would purchase a corresponding amount of Bitcoin, and issue you shares to the equivalent value of that. And then after a set period of time, I think it used to be 1 year, then they pushed it back to 2 years. You could take those shares that Grayscale issued to you and sell them on the open market, sell them on exchanges. And that's how you create a public trade for GBTC. And that, in effect, acted sort of as a Bitcoin ETF back in, I think it was 2016 when it started. I stumbled across it, I think, in 2019. But you could use that as a proxy for the price of Bitcoin, since for every share in there, there is technically an equivalent dollar value in Bitcoin behind it. And a lot of people, what they were doing, because at the time, 2019 going to 2020, you started going into an upswing in the 4-year cycle. And because the value was going up, what people were doing, they were looking at the metrics and the performance and saying, hey, if I buy $100 of GBTC today and the price of Bitcoin is at $1, but now it's gone up and it's $4, that price of GBTC has gone up. I can use that as collateral and be able to buy more GBTC. And you started having this cycle where people were essentially using leverage to buy GBTC, and it created this self-actualizing cycle of moving the momentum upward, to the point where you had it became the can't lose trade. You couldn't. That was the thing you did because that was a surefire way to make money. It kept working. But then when the FTX episode happened and everything started to unwind, all that leverage worked in reverse. And all of a sudden, companies like BlockFi, Three Arrows Capital, I want to say Genesis is the name. Who else got stuck in the shaft? Celsius, a few other large firms. All of a sudden, all their leverage went sideways. Everything went sideways. And they couldn't cover their positions because they started stretching and stretching all that leverage. Well, it's the same as it was since the early days. You go back 100 years to the 1920s. That's exactly what happened in the stock market. It was moving in one direction for so long that everyone started piling in the leverage. And then when you finally reached the top and things started doing its natural unwind, because the people were so far stretched and didn't have liquidity, didn't have proper capital reserves, didn't know how to be cautious with leverage and basically screw themselves in the rear end, they got screwed. And everything just unwound. People got hosed, absolutely demolished, ruined. And we saw the exact same thing in 2008. All that leverage, or even in going back to 2000, the tech bubble, the internet bubble, tons of leverage. Everyone's going in a one-sided trade because it was going in one direction for so long. It became a one-sided trade that when things unwound, everyone's asses got handed to them. Happened in 2008. And now we're at a point where, okay, let's go back to our things where, to me, this here essentially is the same as the GBTC thing, where it's going to, I mean, I can't put any more clearly here. It led to the leverage disaster that GBTC played a heavy hand in. So, but the question would be, at least as far as physical Bitcoin, what is it? How does this play in? What does this mean as far as things unwinding? Where's the price go? So the price goes down. People are redeeming their shares. They're selling like mad. Does that mean that for the redemption of shares, it's just the buying and selling? Or does BlackRock need to sell the Bitcoin they have? Are they either by mechanics or by structure of laws and regulations obligated in keeping an equal value to sell that Bitcoin in the open market? I don't know. To me, when I saw this, to me that said the probability of a down cycle, it just of being, back to your 70% days, it just went up again. I think it was what Bitcoin did when they had I think it was Matthew. I'm going to butcher his last name, Zemeckis. He does a lot of trend analysis and long-term, trends and whatnot and pricing. And one of the things that was brought up was, have we reached a point where we're just in a solid super cycle where it's basically up, that you don't have go up, the price doubles, then retracts 50, 70, 85%. I think with this, it's absolutely going to exacerbate the downside movements. Once things start, reach their peak, take a breather, and all the garbage positions are unwound and bad credit cleaned out of the system and whatnot, I absolutely think it's going to do it because people are going to hold on until the absolute end to earn every last flipping penny they can. And so many people are going to have their asses handed to them. And also a lot of people, because they're just stupid and ignorant, are going to get their asses handed to them. And this is absolutely going to exacerbate downside movement. But that said, that downside movement might be sharper, faster, and shorter in duration than, say, if it was just an FTX type of bear market or a post 2017 bear market. So I don't know. We're going to have to see where this goes. We're going to see where this goes, because once it goes here, I also wonder too where BlackRock falls into the picture. Like, if it's something that's going to ding them financially, why would they agree to this? Or do they even have a choice in the matter? That's my question. We're looking at let's bring up this page and let's share it so we can see what I'm saying. Yep. And then what's to say, where do all these other banks and institutions fall into play? Where do their assets fall in? How does BlackRock benefit from having an asset monetized? If anything, it might mean more buying pressure, because people are going to buy something that's got on an upswing and use that for collateral, just because they're playing momentum, not because it's a smart long-term move. But hey, so keep that in mind as far as a risk factor, as far as a macro factor, so that if we do enter in that situation, if this scenario does unfold in a manner exactly or similar to what I just laid out, and these are contributing factors to the downside of pricing, at least now, thinking about this now, you have the ability to take this into perspective and go, this too shall pass. Bitcoin will continue to eat the world regardless of the price. The price just changes the rate of adoption in any given day. So I'm going to wrap it up there. Let's hope the pony show doesn't get too much messier. You can follow along TinyCryptoBlog in the social media sites listed in the show notes. And with this, I will say, be well, everyone, and talk to you soon.